Good morning. Good morning, everybody. Let's get. I think we've been taping this all night here, um, and we're just punching up on YouTube. And we'll say good morning to everybody. Had a few things I had to be doing this morning, so it's actually quite busy while the program is running. Same program, same deal. Good morning. Hey, David. Good morning. Good morning. Um, David, we don't get to see you that often. So if you want me to turn the mic on, I will. You let me know. As a courtesy, I just want you to know we are on YouTube. So you may not want that. And David is one of our members from Germany, but been thinking of you. And while you're thinking about that, you let me know. Let me share with everybody again, because we may have folks that are passing through that may not know what we're exactly doing. This week we did something different, a little different for us for our own trading, and also a little different, or a lot different from YouTube. Now, when we're showing YouTube, we're not trying to demonstrate an outcome, but we are trying to show how we go about our trading. And most of the time, I think I'll just write for now. That's fine, David. That's totally fine. And also too, David, I was thinking of you this morning, actually. I'm like, I didn't write David a note. I was so eager to get those files back to you. I hope I get them all complete. There were a couple that I thought that I may not have sent because I thought they were a little dated, but I sent them just the same. So any issues there, let me know. And if there's anything, don't hesitate. The one that you had with the date on September, I don't have. And that I may have caught myself in a computer crash where I don't have that file. I hope that isn't the case. I hope I got you everything you wanted. Definitely let me know. What we did this week, we've had okay, super. We had some requests, and I get this from some members, and the request kind of went like, Don, what I'd really like to do is I'd like to be running something 24/7. 24/7 all week, every week, with some minor modifications, kind of like an oil derrick. And that is a little bit different than what we're doing day in and day out. Day in and day out, we can run programs for short periods of times, bursts, and get done what we need to get done. And doing that is very seductive because it feels pretty easy. Right? It feels pretty easy. The comparison I would make is it would be like going out and you don't play a full 18 holes, you play 3 or 4, you play 9, and you don't play all day every day, and you're kind of flexible, and maybe you're playing a different course, that kind of a comparison. You might be doing pretty much the same thing, but it's just smaller bites. This would be playing in a tournament all week, set out, boom, and it's every single day, 24/7. My computer is smoking hot. It's it hasn't turned down, which probably isn't a good thing. I didn't even get a chance to turn it down last night. So that was the idea. And so I had to go through a number of the programs and get an idea as to what might be the most intriguing. I didn't know, right? It's always uncertain. I didn't know for sure what might be the best. And so I had to go in and look, and I had to use our skill set to look at a back test. And ultimately, we settled on a program called SMC HFT2. Now, HFT2 actually stands for High Frequency Trader 2. Now, that high frequency, though, can be adjusted. It doesn't have to be really fast. And in fact, it isn't, I don't think. And we can slow it down a couple of different ways. And it also depends upon what type of chart it's running on. So what's been running here has been SMC HFT2 on a point and figure chart set. This is for the benefit of our members that are listening, set at 5 points. Now, maybe it should have been bigger, maybe it should have been smaller. Once again, variables, right? It has a what we call a buy length of 3, and it has a short length of 4. They'll know what that is. I also set a profit target. Now, at the beginning of the week, I set a profit target at 300 and 300. And I forgot to set the short side. So it was a little off balance. And I ended up having a drawdown of about $1,600 on Monday. I think it was Monday morning. So we made some adjustments. We increased it to 500. She stabilized, started coming back. And then we thought, from what we were seeing is we're going to make that profit target 1,000 on each side. It has no stop loss other than if it changes direction, it will have a stop loss. Now, what do we do with that? So we start running it. Our beginning balance on Sunday night was 31,100 thereabouts. I rounded it off. It was 31,000. So we did draw down, 1,600, right? Which is a good portion of that account. What we're measuring is this performance report. This is a back test over the last 2 months. That is the equity curve. This is some of the trading details. And so this is what now, for the benefit, our members know this. Anybody passing by on YouTube may not. A back test is a back test. It is not a guarantee. It is not a promise that I was going to do that this week or perform in line with this. It's how do I put this? It's not a there's no guarantee that I'm going to do it next week or the week after that or the week after that. So I'm not presenting this to you, if you are passing by on YouTube, that if you join Stock Market Caddy and you run this program, then you're going to make $80,000, $90,000 in a couple of months. You might, and you may not, right? So, but I'm not in any way saying that, because as a trader, you first need to learn to, chip, or as a golfer, you need to learn to, the golf game and the golf swing. And you need to start out by just chipping golf balls. You need to be a good little chipper and a good little putter, so trying, there's no jumping the shark. There's no, I don't have any trading skill. I'm just going to subscribe. I'm going to put a trading strategy on here and I'm just going to start printing money. Not likely, right? In fact, I'm just going to say no without a lot of patience, discipline, practice. But this is what we're shooting for. And as we perform now, we're going to probably turn this off. And I've not scalped it once. I've wanted to. I didn't scalp it once. I didn't turn it off. I didn't, the only thing I did was increase the profit target. And at 1 o'clock on Friday, we will turn it off. And then I'm going to have a trade manager analysis. In fact, I can begin to take even a peek at it. And I will videotape this for our benefit and also for the benefit of our members. And what will I do with the back test? The trade manager analysis, not the back test. I will then compare and contrast the trade manager analysis with the back test. I'm sorry, I keep calling it a back test. The actual trade manager analysis. So let me just run a quick check here. I might be able to give you some of this now, but or as an idea, but we'll see. Let's take a peek here. Okay. So I can tell you that we have had since some of the details here, and we're going to want to check with accuracy, but we have had a total of 61 trades, 61 trades. And we have had the percent profitable 50%. So what does the back test show me? Let's go back here. Percent profitable, 48%. So we're running in line with the model. The profit factor, though, the profit factor is at about 1.3. So that is fairly narrow and not 1.64. So that is the sort of thing that we will want to do. Now we're going to want to drill down on all kinds of things to get an idea and to learn from our trading experience this week. We do not do this sort of detail, this sort of intrinsic look for others. I don't even do it for Susan. Sorry, Susie, everyone has to do that themselves, including Susan. Otherwise, why do I need Susan? Right? I mean, if I'm going to do it, then I just do it. Right? This is learn to trade your game. So we try to give you some insights. You have to live with the uncertainty. You have to live with your decisions, and I do too. I do too. We're and it. I was talking with one of our members yesterday, Chris, right? And he's running this. Now, I'm not going to give, his specifics, but he's doing something different. And he's doing just fine. And we were discussing, not pros and cons, but we were just discussing, some of the, the differences, if you will, right? So, but the message that I guess I just want to convey to the folks that are passing on YouTube, we're not trying to demonstrate necessarily an outcome. Whenever we come on, I don't know what the outcome will be in an hour or two, or at the end of the day, or even at the end of the week, right? We want it to be positive. We want it to be good, but we also know that this equity curve, does have periods of drawdown, and that can be embedded in here. This is quite a bit of money, but what if we're, in here and you come blowing by on YouTube and have and I'm not saying anyone that is there that does, but you have the attention span of the gnat, and you come down and, oh, wow, he's down $825 today. Screw that guy. I ain't following that guy. I'm not saying anybody's saying that, right? Maybe there are some. And if they blow by, good. They need to go, because that isn't what we're trying to do here. What we're trying to do is give you some insights as to what we're doing and how we go about it. I understand that it is very different. It's very involved. And that's why we have the Q School. It would not be responsible of me. And I've been asked this, Don, I don't want to go through the Q School. I want to join as an annual member. I don't want to do it. And, I don't have the time or whatever it is. And that's fine. But that isn't going to happen, because I know there are things, even if you've been trading your whole life, that you don't know. And also, there are things that I don't know. And we're going to learn from each other spending those 3 weeks together. I'm going to learn some things, and you're going to learn some things. And it's just important. But in any case, that's what it's doing. These are the for the benefit of our members settings, and for our members. And David, this is really, by the way, spuriousness, David, and the folks that are here, I don't think, the few times that I've had I did turn off the strategy just a couple of times to adjust the profit target. So only all week I've only had like two shots to do that, and I noticed very little spuriousness. I don't think there's much at all. Now, if I used a stop loss, I would introduce spuriousness. If I used a percent trailer, I would introduce some spuriousness. Now, maybe it would run better. Maybe I would have been smoother. But the fact that it's a profit target, these trades are valid. I mean, they're not, and I don't think when we turn this off, what I mean by that, the spuriousness, some of these advanced charts have some built-in spuriousness. I think that if we run this on a Renko, I think you'll have more spuriousness on a Renko than you'll have here. So any case, but if you don't know what I mean and what that's about, that's, some of the details and some of the things that we have to delve into when we go through the Q school. But so any case, and what do we have here? Notice on Swing Machine, I gotta close this down here. I'm gonna try to, I don't want to leave this up. Shoot, dang it. Can I, there it is. All right, I'm gonna close that. There we go. All right. When we look at Swing Machine, check this out. This is always interesting. I haven't traded. Oh, okay. Awesome. Awesome, David. I'm glad you had a good summer. Where are we in the markets? Let's just take a look. Let's just slow everything down here. Let's put this onto a I want to just put this one on a daily. I've been changing them all the other day. I don't want to do that. There it is. All right. So the VIX on a daily is still short, which is interesting. But over here on the fair gauge, we're above the mean and we are moving that way. So the VIX has gone from down in here to going this way and could go a lot higher. So there's now concern in the market. Let's look at the S&P 500 on a daily. They're panicking. They're panicking. So there's a couple of ways to look at this. Now they weren't. Now the time to have sold and to have shorted in a big way, we did. We took some off. I wish I did more. I always do. And you always will. Was when the S&P was in euphoria. Where was the S&P when it was in euphoria? It was at 4,600. And I can tell you that a option contract, a put option contract for the end of September, so it would be getting close. The cost of that contract when the S&P was at 4,600, 4,630 was about $6,200. $6,200. That's what it would have cost you if you just did a put. If you did spreads, would have been less. But if you just did a put, that's $6,200 would be worth if you closed it today, depending upon if there was a little bit of time left, about 20-something thousand. So would have been a three bagger, three times. Now, the fact that it is in panic doesn't mean rush out and go buy it. If you are already short, congratulations, enjoy it, because it may stay down in here. It may oscillate in here for days and days and days, maybe for weeks. It might. And the fact that the VIX is only here tells me we're going lower, much lower. There isn't enough fear in this market for me to want to come in on a position basis and start buying calls for 30 to 40, 50 days. No, now we're not obligated to get into euphoria. It's not obligated. Now, another person may say, well, you know, Don, we're in panic. It isn't fearful. So I think it's a bit of a trap. And I am going to play it on the long side, and I'm going to use some calls and orient, or I'm going to sell put credit spread or something like that. And that's fine. I mean, that would be a fine interpretation. I just, I wouldn't, but it isn't one where I can get, like, if we were in euphoria here and here, then, and it will only stay there for about a day, doesn't stay there very long. And I would want to be getting long for about, 30 to 40, 35 to 45 days. Does that make sense? But we're going to put this back. So I think that's where we are. And all the markets are more or less in the same place. This hopefully isn't coming as a surprise. It's not coming to a surprise to any of our members because we've been talking about this. And when we look at the calendar, do you remember, like, before the 15th, we were in here and I'm like, this is a short squeeze, guys, in here in front of options expiration and the contract roll. And I said, once we get past the 15th, we might stutter step for a day or two because we have the Federal Reserve here. And then the last 2 weeks of September going into October, most likely going to be a bloodbath. That's what we said. And we did that based on what our systems were trading. Now, we are traders. For those that are passing by on YouTube, we are traders, so we can have a bearish view for the next few weeks, yet we can still buy the market, right? Because he's long right now. He's still long. And look at what he's doing. Look at what he's doing. I haven't put a single trade on. And a beautiful thing. It is a I don't have view on YouTube, so if there's any questions, this is an acquired trading skill set, though. So those that are passing by on YouTube, just understand this is what we practice. We practice, and are involved. Let me Okay, sorry, I didn't have visibility, but good to see you, David. Again, anything you need. We were doing. I also want to share with you. I haven't shown this to anybody yet. But we are working on a visual tool that is, we think, pretty radical. And we've been watching it. I can't show it. I certainly can't show it on YouTube. We will have a prototype of it, I'm hoping, inside of 10 days. And it's really, really, I think, now I haven't been, we've been watching it. I haven't been trading it this week with this running here, but it looks really, really good. And it will have, in all likelihood, it will have its own radar, but it is a tool on a chart, and it is something else. It really is great. I think you guys gonna love it. and we got to come up with a name. I think we're going to call it Trade Tracer, and so we will have that for you for this fall. So maybe about 10 days. We'll probably start showing it a little bit and start trading it next week. It'll be something that we will all learn, how we might use it, but it's really, really interesting. Really, really interesting. Yep, I definitely will. And good morning, Ken. So Ken, I'm sorry I didn't see a note. Yeah, no, it's totally fine. When the market is making you know, big moves down, big moves up, you want to have already established, your trade approach, and so it really doesn't matter. I mean, it is nice to see, the S&P, at least for us, down 40 handles, and the Nasdaq down 150. I'd love to see it down 300, 400, because it means a lot of volatility. But it doesn't. We're gonna, whatever it is we're doing, we're just gonna keep doing it. Now this program here, set with these settings. This is for David and for everybody, our members that might be listening, hearing this. I think that I could have done. I think I could have done much better than this if I was shadowing it and trading it mechanically and taking some trades. I think I could have done much better. But considering that I didn't, make any decisions at all. Now, but it started out in the hole, right? And so and I kept saying to everybody, I'm like, well, I do have confidence, because I have confidence in that back test, and I don't see the spuriousness. And I kept saying, I know it started in a hole, but it should work itself out and get positive and do well. It should. And if I simply just threw it away and gave up on it, well, then we wouldn't be, we wouldn't be here. I'd be doing something else. So you have to, it's like everything else in life, or a sporting event. You've got to take small bites and see, for yourself. And for those that are passing by on YouTube, if you're thinking, please, I'm not suggesting any of these tools are holy grails. The holy grail is you. The man in the mirror. Did you watch the Tom Brady interview yet? I sent it to everybody. I listened to it last night. I found it, I mean, I always respected Tom Brady, obviously, for the athlete that he is, but I didn't really have a sense of him, of who he was. I really didn't. And I started, and I'm like, Tom Brady interview, and I listened to about 5 or 10 minutes, and then an hour and 45 minutes later, late last night, I'm like, wow, very, very. If you haven't heard the interview, and he's, for those members that are in Europe, he's, maybe one of the greatest all-time quarterbacks in American football. And what a story he told. I did not know his story, and I found it riveting. I really did. I thought there was some, it's not a story, not a message that a lot of young people are hearing today. And I thought it was really, really good. Some of the, I don't want to spoil it. So if you haven't heard it, you'll want to, I think. And some of the things that he said that, that resonated with me. Well, when he started out, he said, I wasn't a prodigy. I wasn't a prodigy. I wasn't hitting, like Tiger Woods, golf balls at 3 years old. I didn't come out of the womb throwing a football. He said actually when I was a freshman in high school, I didn't even know how to put the equipment on. And he proceeded to tell that story about how he was always being challenged. You just didn't, you just wouldn't think so. And that's what I found. And he talked about the surrounding himself with friends and family that, believed in what he was doing. Um, I just thought it was a riveting interview. And he talked, now this is also, I mean, I'm thinking about it in terms of trading, but I had a previous career, in surgery, and we had some very, very high expectations put upon us. It was a very well-paying job, and it was all good. It was all good. It was enjoyed. But we had high expectations on us um, all the time, and it just never, and I did it for a long time, and it was a stressful place, and being in surgery, and but you just I think you want to be aware of that sort of thing, and if you can grow to be comfortable with the uncertainty and grow to be comfortable with that, I just think you'll do better, and I think it'll be a more fulfilling endeavor, whatever the endeavor is. So, any case, um, if you haven't seen it, you might want to. And if you have kids, I definitely let them see it. It was a great story. If you have questions, any on YouTube, again, we've done quite a few YouTube hours of late. It's going to slow down um, as we move into the fall here. We'll just be a little too busy. We'll try to come on periodically. But why do we do the videos? We do the videos and the live sessions so that you have an opportunity to get a glimpse, to hear us a little bit what we're doing and why we're doing what we're doing a little. It's a little different. Um, and a chance to ask questions. Let's just mark this up a little bit here on Swing Machine. Now, we're not trading Swing Machine, but we will have members that are. Look at the 5-minute VIX. It goes long at what time? 3:45. The boys, there's a war room in the Treasury Department. You know that? They call it the markets room. The markets room. They can reach the CEO of any major US company in seconds, and hedge funds. They open at 4 a.m. So they were in a little early this morning. And then check this out. The S&P sells down at 4:14, 4:15. What a coinky dink, right? 30 minutes later. How about the NASDAQ? 4:15, 1,500, 2,100. Use the micro, 150. Use the micro here, 210. Use 10, 15 grand. Use 10 of them, 21 grand. The Dow is long a little bit at 1020. I don't trade the Dow a lot. It's only 30 stocks, very easily manipulated and really not that relevant at all to us. Okay, so we're not a Dow watcher. Why would the Dow be up? mainly because it has 30 of the biggest stodgy companies, in the country. And a lot of times, if there's what we're interested in as traders, is there an environment for risk or not? And a lot of times when the risk is coming out of the market or markets, namely the NASDAQ, maybe the S&P, it will have a tendency to rush into the Dow as a safe haven, because a lot of these mutual funds and charter funds, they by charter have to have money in the market, and they're not worried about getting a return on their money. They want to get a return of their money. So they will push money into anything that's working in the Dow, the Walmarts, the FedExes, and that sort of thing. So, but it won't, in the end, it won't be enough. They'll get them all. So it'll turn down, but we don't really, Susan likes to trade it a little bit. I very rarely do I trade it. The Russell, on the other hand, we do like to trade, and the Russell is like a little sports car, and it turned down at 445. It is a wonderful market in and of itself to get the flavor of risk. When there is an appetite for risk, the speculators love to get in and get on the Russell, the small caps. So we do pay attention to the Russell, as an indicator sometime in and of itself. So if we have a day, which we don't have right now, but if we have a day where the S&P is all green and the NASDAQ's all green and the Russell is struggling, we might begin to say, you know what, we might be moving into a regiment of risk off. Gold is, getting monkey hammered here a little bit. And we think that is in large part a knee-jerk reaction to the dollar. I don't have the dollar up here. My guess is the dollar is rising, and the dollar will rise as risk comes out of the market. They've got to sell and go into, the first step is go into cash, and the dollar will go up. I think that if anybody we're not investment advisors, right? We're not making long-term suggestions for people. So please don't, I wouldn't do that listening to anybody, not Peter Schiff or anybody. If you're listening to the internet and trying to make investment decisions, I don't think that's really a good way to go, right? But, that all said, our systems indicate that gold is consolidating and silver, and that in a very short period of time, we think that they will break out to much higher prices. We think gold will, break out of this 2000 area and, be, on its way. Same thing with silver, some of the commodities, and we think ultimately the dollar will break down. But, and then oil is still doing its thing. Now, what are we doing over here for the folks that are passing through on YouTube? We made a note here. We did something different this week. Took us an entire week, and we didn't do anything else, so that we had a nice pristine view. We wanted to run one program, and we wanted to run it on one market, and we wanted to run it 24/7, like an oil derrick. Just so my computer is just, smoking hot. We started on Sunday night with a beginning balance here of 31,000. We're running what we call SMC HFT2. It's 1 NQ. It's on a point and figure. We're running it on 5x3 and 24/7. Now we have, if you are an annual member and want to know the specific settings, I've given them out already. I won't repeat it, but if you want to know, we're happy to tell you. If anyone thinks like, why would you do that? The markets are way, way too deep for us to step on each other's toes. The studies have been done. You have to put in about 100 contracts to, in effect, move a market a tick. So we're not, we're not going to step on each other's toes. And so she's just doing her thing over here, and this is what it's done. We will stop that strategy on Friday at 1 o'clock. it will be what it'll be. We haven't scalped it. We haven't intervened at all. We made a couple of adjustments the first day or two. By the way, we started in a hole. Could have been my fault, may not. I don't know. I forgot to get the stop or the profit target on the short side. It may have hurt me. I don't know for sure. I'll have to go back and look. But we had a drawdown right out of the gate into Monday of about $1,600. So on an account that size, it's a fairly, attention grabbing draw. But I felt very, very confident with what we were seeing in the back test that it should work itself out. I had all sorts of apprehensions, though. Still, it's always, Rosadana, Anna, it's always something, right? So I felt like, Jesus, we got Monday and Tuesday, it's going to be choppy. Then on Wednesday, it's got the Fed, and then it's always going to be something. And I'm like, look, Susie, it is what it is. We got the back test, we need to run it. And that's what we did, right? So, and fortunately, we've had a nice result. The important thing here that I always want to say to everybody on YouTube, I am not, okay, I am not trying to say, or project that you are going to have this outcome, that if you subscribe to Stock Market Cat, I haven't even talked about that, and you put this program on and you do this, you do that, and that's what you're going to have. I'm not saying that. I don't know if it's going to do that for me next week. I don't know. When I listen to the Tom Brady interview, and if you haven't heard it, I think you'll want to. I think there were so many takeaways, but one of the things that he was saying that I just believed him, that he just talked about, like, it. There was uncertainty for him. He never got to a place where, he just said, like, okay, well, we won the Super Bowl, I can relax now. And I don't have to, work that hard anymore. He talked about how, it was every week. It was every year after year. He was constant. You'll have to hear it in his own words. I really, that interview really, really resonated with me, with what he had to say about things. I think every young person in the country hopefully will get a chance to hear it. And he said it with such conviction. I mean, he believed it in his heart of hearts. And he referred to, the man in the mirror. So when it comes down to, to trading, the Holy Grail, we'll have folks, well, what's the performance of this? What's the performance of that? I can tell you, but do you know that being nice, not everybody that's here, but do you know you have to perform? Not me, not the strategy. We talk about, mechanical trading and robotic trading. You have to do that. And I can't do it for you. I wish I could, but I can't, and we don't, but we will instruct you and make things available to you, and show you what we're working on and what we're doing. And our members know this, right? So I'm talking really for the benefit of folks that are passing through on YouTube. David, good to see you. Have a good rest of the day. I'm sorry. Check in though. And so we have, you're watching on YouTube, which is on delay and not the best image. You want to put it in high definition, but our members like David, can see what we're doing at any given day and reach out to us at any time, through our live Zoom feed. And David has been with us. I'm going to say, God, like 6 or 7 years, long time, from Germany. David also, he's the person that checked in one week and said he had a profit factor of 1 week of 80. 80. Could we be intervening, right? Could I go up and grab that money? I could. I could. I really think that I could have done much better than the machine. Maybe I'm kidding myself. Um, but we could go up and grab that money. But we're gonna just, we're gonna stay with the program and just let it run. If you have any questions, let us know. And otherwise, I'm gonna shut up and watch with you and get to work on some other things. If you want us to plug your stock or your market into Swing Machine, um, and you can see the Dow is also trying to get short now. It's underwater a little bit, but we can bracket it. Jeff, I think I see Jeff. Good morning. Um, I think you'll find the Tom Brady interview fascinating too. Um, that was really, I really didn't know his story, through high school and really through college. I mean, I knew he went to Michigan, but I didn't really know. And he described that, and I was like, oh, it's pretty interesting. Yeah, you have to let me know what you think. Enjoy. Now be sure that if you haven't signed up for our email list, if you want an email, we will videotape. So the overnight session is completely videotaped, and we'll compress hours of video down to just a minute or two. So if you want to be sure to get a copy of that, you make sure that we have your email. And we don't always put everything on YouTube. Sometimes we do, sometimes we don't. But again, if there's any questions, we're just going to relax here, let things roll out. And the market is doing pretty much what we expected, which is always fun. And our machines have been all over this. We're trading with, surgical precision, and there isn't just one way, there's a lot of different plays. It isn't just, quarterback sneak, quarterback sneak. It's, you can run different plays. You can do different things. We'll stay with the golf analogy. You can hit 5 irons and 7 irons. You get to choose the club. But you could be playing a par three one day and it's a 7 iron. Another day it might be a 4 iron, depending upon the wind direction and depending upon the lie, and the conditions change. And so don't be trying to don't I don't want to tell anybody what to do and not to do, but I'll just share with you, our perspective. We're not trying to play a perfect game. We're trying to do the best we can do. We definitely are. We're trying to do the best we can do, but we're not trying to play it perfectly, right? And we're also not really caught up with the win-loss ratios, right? That win-loss ratio is it can really be hurtful, you know. I mean, I'm sure it didn't feel good for Tom Brady to, throw an interception, but, and he even talked about it during his interview too. He talked about, players that, get, totally, caught up in their stats, and he was just more trying to, get the job done, which is, to win the game. Now that's what he's doing. What are we trying to do on any given day or a trading session? When I sit down here or stand up here, I expect to end that session with money. Okay, with money. Now, um, do I do that every single session, every single day? No, I don't. I don't. Um, but I expect to. I expect to. And I don't get caught up in what's going to happen tomorrow. I'm not getting caught up in what's going to happen this afternoon or even in the next hour. You've got to relax that brain, that anticipation of what's coming next. Just stay, if you can learn to embrace the uncertainty of all this, if you can learn to just react and stay in the now, it is actually very, very relaxing. It really is. It's almost, what I describe almost meditative for me. It's just like, okay, there we go. Mm. Now we have members that don't have the time to be here on YouTube and don't have the time to, during the day and have to play the game a little bit differently, and that's okay. And they have to use options. So then we have to kind of slow that down and get the right tools on the right resolution and trade accordingly for that. So you have to define. um you can't you can't control the game. We can't, no one can, but there are a lot of things that you can control, and you need to define the game of which you want to play. And then, and we'll try to help you try to find your game, find your approach, and then, you have to, you know, grind it through. You have to grind it through and find your level. And if you're, and it's fine to be modest, 24 trading days in a month, take Fridays off, there's 20, $100 a day is 2,000 a month. Can you be happy? Can you be happy with 100 a day? Maybe 200? Are you gonna, you know, grind yourself up? Well, I didn't get the 1,800 and I didn't get the 2,700 and I didn't get, and here's the Dow, by the way, when at 11 o'clock, we'll see, where that's going to go, but they're getting them all. Notice the VIX is now trending up. What does that mean? That means that the people who are betting on the VIX futures are betting that the options market, that they're not going to buy their calls. They're going to stop buying puts. That's basically what that means, that it's becoming fearful. And they are going to stop buying puts. And they're going to buy some of the puts that Susan and I bought. And they're going to pay. They're going to pay a lot more for them. And I'm going to sell them to them. Now you can play along, on paper here. I wouldn't say, you're on delay, but again, could I come up and tag that $300 and wait for the next one? Yeah, I could. I've been telling our members, and they're listening too. I think that um, I could have done a lot better here had I been doing some scalping, and maybe I did it on some different rules, using swing machine. I think I could have done better. Um, we were talking to one of our other members, Chris, and he's running the same program, but he configured it a little bit different, and and is doing just fine. By the way, I just want to mention to everybody, hopefully we're going to be here for it. We're tentatively, um, well, we got a couple of, we got some few travel plans in store in October, November. One of which is we got to go pick up Ted's sister. He's getting a new, he doesn't know it yet. We got a 3-year-old golden. He's getting his sister. And so we'll be away for a couple of days to go get her. But so hopefully it doesn't fall on the same week, but there is a CME challenge. This CME, Chicago Mercantile, is out of Chicago, obviously, and this is where the futures are traded. It's like the CBOE, right? It's just a competing exchange. And they periodically run some contests. Now, it's only for bragging rights. I do think you should register for the CME. Or, it's up to you if you want to play in the contest, but you should register on their site. It's free. They have some educational materials and whatnot, and I think it's a good resource. I think you should avail yourself of it if you haven't. Um, and then what they will do periodically, they do it a few times a year, not that often, but they will run a contest from Sunday through Friday at 1 p.m. and you have to trade the markets that they outline. You've got to trade with only the leverage they provide, so it's a level ball field, and but you do have to use their trading tools. So you got to put it in. It is in a simulated environment, but it can't be rigged. It can't be fixed. And the issue for us is we can't put robots on it, but we can trade it mechanically. So that's what we'll do. We'll follow our mechanics and try to affect the trades. We just can't trade as frequently as what you're seeing here. I wish I could do that, but I can't. Well, it's on the website. The first time they did this, the first time we entered, there were 1,400 traders nationally that entered, and we have the documentation. We're proud of the fact we were out to win it. Only the top 3 get some cash prizes, but on Thursday of the first contest, 1,400, on Thursday we were ranked number 10. And we tried to win it and we didn't. We came up short and we finished number 20 out of 1,400. The next time there were 1,600, probably different markets. And on the closest we came was on Friday morning at about 5 in. I stayed up overnight trying to win it. And at 5 a.m. we were ranked number 2. And I was bleary-eyed and ended up having to go to bed. And even Susan woke up and said, Donnie, what happened? Why didn't you stay with your plan? I said, I got tired. I got exhausted, which can happen, right? You get overtired on something. It's like, I don't drink it, or anything, but it's kind of like, being punch drunk. If you get overtired, you make mistakes. And we ended up finishing number 7. It was too bad because we were number 2, and And but whatever. So we're still out to win it. And then the last one, they were 2,400. So they keep growing this thing. So they'll probably be like 3,000 next time. So it's getting more difficult. But there were 2,400, and Thursday, on Thursday afternoon, we were ranked 35. Now, what I've told all our members, and I'll probably still stay the same, I'm not going to stay up overnight all week long just to win the thing. I mean, maybe I should, but I'm not so sure about that. But I said that if I was in the top 10 and within striking distance of winning the thing, that I would stay up overnight, and hopefully I have some good market volatility that I could, and it's going to be on the indices this time, that I could win it. So when we were ranked 35, I chose not to stay up overnight because I didn't think that I could make up that ground to win, be in the top 3. And we finished 107th. I didn't. So, but it was still, that was in the top 5%. I think it's still good. There's a little madness to it. I mean, you got to try to win. You don't have to be winning at this, right? You don't have to beat anybody. You don't have to beat me. I don't have to beat you. You don't have to beat the market. You just need to come in and we remind ourselves, just extract cash flow and get out of here. But on the CME challenge, there is a sport to it. And, if you want to, get the bragging rights, you want to try to win the thing. And that's what we'll try to do. The tools that I used, the last 3 times I used, Swing Machine, and I used, custom Rinko. And we have a tool that we call Dual Fairway and a strategy called Dual Fairway. And that's what I used. Maybe I don't know what I'll, for sure, probably do the same, but we will try to win it. And if you're following somebody, I would suggest that you ask them to do it. Now, if they give you some bullshit about, oh, yeah, that's a simulation, that's ridiculous, I'm not gonna enter that. I beg to differ. Do it, do it, try it. And so, I mean, we have, again, 1,400 people, number 20, 1,600 people, 7, 2,400 people, we finished 107. That's not that isn't an accident. Now, I mean, you do need some, and my hats to the people who won it. I don't know if there were repeat winners, but, my hat's off to them. I mean, they did really well. I mean, there's no getting around it. To win the thing, you got to have, really, really. And what was amazing is that the second one where we were number 2, I kept checking the standings to see where they were. I could literally tell who was sleeping and who was actually trading, and I could actually tell what they were trading. And there was one guy who actually did finish in the top 3. He may have won it, and I'm like, you son of a bitch, you are damn good. Like I could literally tell as his account was moving. I could tell what he was trading and what side he was on and what he was doing. I could actually tell, and he was working it. The others were asleep, and maybe that was the best thing for them. They were trying to sit on a lead, and I overextended. There may have been teams of people too. I may have been going up, against, or you might be going up, a group of people. But anywho, as we just motor along here, this little program that's running in that little chart there, HFT2, does stand for high frequency trader. That particular, we did a video on that, and that gets a lot of attention. And we didn't really mean it to be that way. HFT2 is meant for high frequency trading, but it has settings to it, and depending upon what it's run. And so it doesn't have to be high frequency. It doesn't have to trade really fast. You can slow it down, and it's running relatively slow, and which is fine. A lot of new people think that you've got to trade really, really fast, really, really frequently. And as hopefully you've seen through some of these videos, you don't. I mean, it can be shocking how little you have to trade to get done what you need to get done. You may be really, really surprised. And you cannot take out the risk. Okay. Just want you to know that you cannot, there's no cornering the market. There's no taking out the risk, right? You're not going to throw, a perfect baseball game every single time. You're not going to, and even Tom Brady is saying, it's not going to be perfect every single time. Um, we're just trying to come in and do the best that we can do, you know? It does need to, when you listen to Tom Brady's interview, though, you know I would be curious what other people think, but I wasn't even going to listen to it. I'm like, I don't want to listen to that guy. I don't know. I didn't know. I didn't. I mean, I followed him a little bit, but I mean, like everybody, but I listened to about 5 or 10 minutes, and he had such a passion, still, still, and not just a passion for football, but just really interested, in doing what he's doing, and and you know, um, it was just really, really interesting interview if you haven't heard it. And so I listened to the first 5 minutes, and I wound up listening to the whole hour and a half. I found it really riveting. Um, and he didn't really have it that easy. You would have thought like, oh, the guy's, he's the Tiger Woods, he's a prodigy. It just came easy to him. No, he had to make, incredible sacrifices and incredible decisions. Well, I don't want to spoil it, but he describes a decision, and boy, it would have been a tough decision when he was at Michigan going into like when his final year, and he had another opportunity. And boy, I got to tell you, I don't know. I don't know if I would have made the decision he made to do what he did. I mean, and it really, really said something about him, and how he views things, he referred to, the man in the mirror. I'll have to get his book. I think it's called The Man in the Arena. When we're talking about trading, you know, um, I I equate it to golf because it's a sporting event to me, right? This is a sporting event. It isn't surgery. It isn't war. It isn't, life and death. It's a sport. It's a sporting event. So we equated it to golf, but I also, can equate it to, a lot of sports. And we talk about the resolution. And I don't hear anybody ever talk about this. And I think it's really important. And so I'm going to go ahead and type this out and offer this to you to think about what it is you're doing and how we came to think about it. So resolution, trading resolution. What is it? What is that all about? Well, you need to define for yourself your trading resolution. So if you are at does your historical data for swing machines show the most profitable time frames? 1, 3, or 5? Yes. Yes. And it could be 2-minute, could be 7-minute. Yes. Yeah. So I'm just answering a question, which I'll do. RS is asking. And yeah, you can definitely, we can lift this any aspect of swing machine can be lifted from this radar, put onto a chart, on a time chart, even other charts, but mostly time chart. And we can then begin to manipulate variables to find out what you're interested in. And that might be, should I be running the 1 minute? Should I be running a 3 minute, 5 minute? So we have members that have told us, for instance, that they set their radar at, they don't have it set at 135 RS. They have it set, some of them on different markets at 2 minute and 7 minute. Others don't use time. They use ticks. And a tick in this instance would be a transaction. And so one of the frequent settings is to mimic like a 1 minute is 800 transactions. So you could do that. But also that what's going to impact your performance, what hours are you going to run? So you can go into the program and you can say, okay, well, I'd like to run from, I don't know, from 4 in the morning to noon. Okay, what are the results? Maybe, that's a good time. Maybe you should be running from 4 to 10. Maybe you should be running from 8 to noon. And then so it'll answer some of those questions. Then you want to drill down and start looking at, you can ask the computer to just tell you, or you can drill down as we started to do the other day. Well, what is the average winning trade? So you have some expectation. What is the average winning trade? So you know when to take some profits. When is the average losing trade? What is the average run up? What is the average rundown? Where is the maximum adverse excursion? Where might I begin to place a stop? Then, now this isn't meant to complicate your life. This is meant to bring you, to compete with these people. We have something called, for a program, Swing Machine Cubed. Swing Machine Cubed. Well, we have actually Swing Machine Squared. Swing Machine Squared, for instance, you can trade the 1 minute, the 3 minute, the 5 minute, based on what the VIX is doing. Wouldn't that be interesting? And that's really good. So when the VIX is going up on a certain time frame, which frequently is 10 minute, so we know this from other members, right? We try to share this. When the VIX goes long on a 10 minute, we might want to start taking the 1 minute shorts on the ES. And then we can look at the performance characteristics of that. And then what's the average winner? What's the average loser? How often does this happen? And we call that squared. We even have Swing Machine cubed, meaning we can take the 1 minute only in the direction if the 3 and the 5 are in the same direction. So if the 3 and the 5 are short, then I don't want to take any of the longs. I only want to take the shorts, that sort of thing. And then we're soon to have, now we've had these for years, right? We'll have Swing Machine Cubed plus, because then we could do multiple time frames also based on what the VIX is doing. So we can, I don't know if you know this or not, but we have, let me, I'll just digress, because this is the sort of thing, this is where we like to spend our time, right? So rather than talking about inflation, deflation, and me getting over here and pointing to a moving average and this and that and that and this, we would rather answer these types of questions, because this is where we spend our time, is in these performance reports and in the trading characteristics. So when you have a chart, let me draw this out here for you just to give you a visual. We have a program that we won't make it red, we'll make it blue. We have a program that every night we report on. It's the first thing we report on to our monthly members. And that program has 3 different data streams. What do you mean, Don? Let me show you. Just going to write this out. It has a data stream 1, oops, I'm sorry. data stream 2. That other one, I won't go back in data stream 3. And in the chart are 3 different data streams. You can put in as many as 99 data streams into the chart. Data stream 1 is the stream that we're going to trade and want the signal on, and that is the indices. So it's the indices, like the ES as an example. The second data stream is the VIX. And the third data stream is the yield on the 10-year Treasury. Now, we did this years ago, right? Everyone's talking about the yields now. We did this years ago. You don't see on the chart the VIX, you don't see the 10-year yield, but the data streams are flowing into the chart. There is an algo that is compressing this data and making a decision to buy or sell the ES. Now, when we wrote this, we had an idea or a concept, this goes back years ago, that the markets were moving in relation to the VIX, in relation to the 10-year. And we had this idea. And Susan and I, we didn't say anything to anybody at the time because it seemed crazy. So we started writing, Susan started helping me write the math programs. I had to learn how to do it and started to write it. Then what we did was we went back. This is now this is a daily signal, not an intraday, but a daily signal. The signal comes in at the end of a given day. Not every day, but, and so we had this idea and we write a number of programs and we look at it. Now, on this instance, we go back when we did this is like 2018, maybe 2017, 2018, but we went back like almost 20 years. And it was really interesting to us because from 2000 to 2009, it absolutely sucked. It was terrible. It was terrible. It just was terrible. And then in 2009 to where we were was phenomenal. I'm like, what in the hell is that about? It was the craziest damn thing, right? In the back test, it was really, really good. And I'm like, wow. And now we thought we were going to do it just on the ES. So then we did the NQ, then we did the Dow, and then we did the Russell. And they were all very good. The one market that was the weakest was the Russell, but the other 3 were virtually the same. The NASDAQ was even better. And we thought, that's kind of interesting. Well, that kind of comports with our view that the markets are commoditized, that the individual trading action of an individual stock is meant really for Jim Cramer and for CNBC, that really the markets, as you're seeing, these days, are commoditized. They're all moving, together. So when we ran the back test, it was really good, but now we run into the same issue that we all have, and that is, well, what's happened in the past may not happen in the future, right? So we got to come to grips with that too, right? That isn't just a disclaimer. That is true. That is reality. So I'm describing this to you. So if you are hearing people say that, don't just dispense with it from the standpoint like, oh, that's just the disclaimer. Understand what that is and how do they deal with that? This is how we deal with that. Knowing what's happened in the past may or may not happen in the future. We did all these back tests, and going back that many years, we had tens of thousands of these tests. It took us hours, maybe even more than a day, to run all these tests. Well, TradeStation has another tool, and you can save the backtest information, and you can plug that the backtest information into another tool that they call the Walk Forward Optimizer. Before the Walk Forward Optimizer, the way that we would do this, it was longhand, is if you had a strategy that, and basically in round numbers or in round perspective, what this Walk Forward Optimizer will do, it will randomize the data of the backtest and give you a perspective of how robust a particular strategy might be. There's still no guarantee. There's no guarantee in any of this, right? It's always about probabilities. There's just no guarantee. And so you have to either, you have to be comfortable with that. So what's my train of thought here? I know it's an important one. Oh, where was I going? Before we had the Walk Forward Optimizer, though, we used to do it longhand. And how would we do that? So say you have a strategy that you backtest for like 2 or 3 weeks, and it looks really, really good, right? On the backtest. Well, then what we would do is we would change the timing on the chart to 2 or 3 weeks, like 6 months ago, or 5 months ago, or sometime further back, to see if it would have run randomly then. And we would do this in spreadsheets over and over and over again. We would do this longhand. Very, very time consuming. And there was some issues with that too, because then you can say, well, we're comparing very different periods of markets, and so I don't know. It didn't seem it has issues, but the Walk Forward Optimizer automates that process. So when we took the name of this strategy, by the way, is called Nicholas. You see, when we started out, we started to call all of our strategies after golfers, and we kind of got away from it because it got a little too confusing and everybody was golfers. But this happens to be the Nicholas, because we thought, hey, it was that good. But when we took the back test, the tens of thousands, hundreds of thousands of tests, and plugged it into the Walk Forward Optimizer, we started to get these results back, and they had these little asterisks to them. I'm like, Susan, what in the hell is that? I've never seen that before. And I actually had to look it up. I didn't. I'm like, what is wrong? Why are they giving us an asterisk here? And what the asterisk said was, it was the criteria was passing with what they called distinction. And it could be like double distinction. And what it meant was that not only was this program likely to produce, but it was entirely possible it might do better than we thought. I'm like, holy shit. Really? That's what we did. So what did we do with this? And we have members that are listening to this now. So what we did was we announced it to our members what we had been working on. And I said, this is what we did. We showed them the testing. We showed them everything. And we said, look, we can keep this to ourselves and let you know how it works over the next 6 months or a year, or we can start reporting on it, take it with, take it, just be advised, just, take it slow. We're going to take it slow. You can take it slow, but do you want to see it? And every single member said, yeah, we want to see it. We want to see it too. We want to be part of it. Okay. So that's what we did. And I can remember I lose track now of the times, but there were a couple of, incredible trades that it's had. By the way, Nicholas is short the market, right? He had been long. Yeah, he went short the other day. And they know that, right? So our monthly members know that. He's really incredible. But when the first signal came through, the market was like really, really bullish. And it came through, and I'm like, Jesus, I don't know if I trust it. I even said that to everybody. I'm like, I don't know. It looks really bullish to me. And now it it reports on all four markets, a futures contract and all four in the VIX, which today would take quite a bit of capital. You could trade just one of them. You could use micros. You could just use it as a barometer as to what you might want to be doing with options. But that first trade, we didn't take it, and it ran up like in like about 5 or 10 days, like about 60 or 70 grand. We're like, oh shit, man, we missed it, you know, because we didn't trust it. And well, then, we started paying attention, and then it just gained our respect. It's the first thing we report on every single night is Nicholas, every single night. Now, the biggest one, which was shocking to us, when COVID happened, we knew about COVID in January. In January, when you're around this, you're paying attention to everything that's going on, unfortunately, but so we knew what was going on. We knew about the carbon monoxide burnings in China and all the people dying. And yet the market was running. If you recall, the market was running. And it kept running. And I'm like, man, I can't believe this. And Nicholas was long. And and then it got to be the latter part of January, and concern is really now starting to build on this stuff, and it's really becoming public. The market was still running, and Nicholas was still long. And I'm like, I can't believe this. I really, really wanted to go short. And then it was February. And then on February, we almost got to the point I'm like, you know what? Maybe it isn't going to be a big deal to the markets. And I'm like, it's just not firing. And Nicholas is still long, and maybe it isn't going to be a big deal. And then on February 24th of that year, out of the blue, I go to do the nightly video because it's a nightly signal in Nicholas's, and there's nothing to see. There's nothing to see on the chart because it's a math formula. There's nothing you can point to. It's just compressing those three data streams, and he goes short. And we let everybody know. 3 weeks later, if a person had taken, and we have folks that took it, but if you had taken it with the four, markets and the VIX, which would have been a big trade, it collectively 3 weeks later was up 260 grand. Did we get all that? No. Did we get a chunk of that? Yes. We used options. But we didn't get it. We didn't get it all. And I had to struggle with it too. I mean, we're traders. So, I even had members saying, Don, do not close those options. And I got Susan saying, we're closing them, Don, because it was a rapid. But to give you an idea of what you can do right now, and we still, to this day, as a monthly member, you get to see Nicholas, how he's positioned. And I can tell you right now, collectively, let me go see. Nicholas, yeah, I have it up. So I can report in on you. Nicholas, he is up in all the markets. If you took it collectively, he's up about, close to about 10 grand since yesterday. Yesterday, he triggered on the 20th. He triggered. Now we never know. How high or how low it's going to run. Nobody knows that, but we can get other indications. But any case, so let me just go back to where we were. So I just, I described that as what's possible, but trading resolution, what do I mean there? Let me just kind of erase this. This is the way I think about it. When you go to a football game, you go to the Miami Stadium. I was thinking of Miami. And you're in the skybox, And let's do that and draw this out. You know, you're up in the skybox and you're watching the game. Well, you're eating, you're eating shrimp and caviar and drinking the best beers and you get TV sets up there. There's a lot of things going on in the skybox. And and if you want to see the game, you can watch it on TV. You can get your binoculars and see the cheerleaders and see a little bit of the plays and so forth. It's on the field. Um, the people that are and it's a fine way to see a football game. It's fine. It's a great way to see a football game, right? If that's what you want to do. But for me, a person who is an investor, they're in the skybox. They are really far away from the game. Then you drop down, and then you've got people, in the grandstands, right? And now they're outside in the elements. They don't have, the food. They don't have, all the advice and everything that's going on. And they're trying to do their best to understand the game and to see the game and have fun, right? So these are the investors, and as we drill down, this is, maybe the grand tier, and then you get into, the first tier, and then you get down to the really expensive seats, the 50-yard line, and you're getting closer and closer to the game, right? But you're still in the stands. You have to decide where you want to play this game. Do you want to play it from here? That's what's different over here. What we did this week with this thing is running robotically. But it's back into the stands a little bit because I haven't done anything. I just been letting it run. And that's a little bit different. And this is going to take time, for a person to develop confidence in. What we're doing, and I've run out of room, so I've got to erase these. What we're doing when we're trading intraday, and so I had a neighbor once. My neighbors don't know what I do. I don't, really talk about it. And when I go to the dog park, I don't talk about the market. I don't talk about the markets really to anybody in public. I just don't, because they, it's just, I don't really care. But intraday trading is different in that you are, I want to show you this. Can I do this? Let me see if I can. It's funny that, it's X's and O's on point and figure, but you're on the field. We are on the field. It's different. We're not in the skybox. We're not in the stadium. When you are trading like this, you are on the field. You are playing the game. You are trading the biggest, deepest markets in the world. You are competing. You're trying to do your best. And there's some dude in Tokyo, some dude in London, some dude in Chicago, some dude in New York, or a young lady, or some guy on his yacht. And they're also trading. Bear with me a minute. So the point being is you're on the field. So it's very different. And, you've got to have the right tools, and you've got to have the right approach. And maybe you want to be on the field, maybe you don't. Maybe you don't. And that's where, and I talk to some people and they say, I talk to them on the phone, they call, oh, I really like what you want to do. What's the performance? How much money am I going to make? How much money am I going to make? How much money? How much money? And then, I don't have the time for that Q school stuff. Okay. All right. Well, good luck. Takes time. Takes time. But our members, so that's why there isn't, we can't be, and we don't, sending out alerts. Are you kidding me? I'm going to send out an alert, oh, the market's selling, the market's buying, or NVIDIA's doing this or NVIDIA's doing that on a daily, it's silly. It's silly if you want to be trading, on the field. But if you don't, that's okay. So you can change the resolution in a nanosecond. Now, let's go to the ES. Now, you're going to immediately go to the money, but I'm thinking about the resolution, and you may not have the skill set to withstand and if you have an emotional attachment to money, you just, will, get overwhelmed. But let's just put the ES on a 60-minute. So on a 60-minute, 22 hours ago, which was yesterday at 3 p.m., swing machine went short. And yes, you'd be up $4,000. But if you don't have the experience, you won't have that $4,000. You might have 200 or 300 bucks or 400 bucks because, you'll be making decisions on the money. And there's really no reason, to come out of that 1 hour. What about the NQ on a 60-minute? 26 hours ago at 11 a.m. yesterday, you'd have $8,500. How about the Dow? I can't change it because I can do it. Maybe I can do it here. There we go. 60-minute. 20 hours ago, 1,000. And then how about the Russell? Let's change that to a 60-minute. 2,000. So there's 4,200. Let's just call it $4,000. There's $12,000, $13,000. There's 15,000. Did you get any? Now, if you come back to me and say, well, how many times does that do that in a month? And how many times does it do it? And how many times? Not only in a month, how many times does it do it in a week? It does it a ton. But that doesn't mean that you're going to get it. Do you have the patience and experience to sit on your hands when that running back is coming at you? What are you going to do when the play starts to come your way? Do you have the skill set? If you're a defensive end on the field and the play is coming your way, you're going to have the stamina, the chutzpah to make sure that running back doesn't get outside you and you push him in, and so that maybe you don't get the tackle, but everybody else gets the tackle, or you're going to get blown out and he's going to run down the sideline for a touchdown. This is a game. This is a trading game. So swing machine is going to keep, teeing them up, but that doesn't mean that you have the skill set to, I'm equating it to football, but golf, the skill set to get, to hit the ball. And do you have the tenacity? Could be any sport. Do you have the tenacity to, put on a trade? So like one of the things that I will do routinely, and this drives Susan crazy, is I will get up so much money, and what won't get into too much detail here, but we'll put this back. Um, and it could be the distance of the average winner. And I will immediately put on a break even, in essence, a break even stop. And I'll just let it run. And I got to tell you, probably 7 or 8 times out of 10, it'll come back and I'll get stopped out. And Susan can't even stand to look at it. It bothers her because Donnie, I can't believe you were up $385 and you let it come back and you only made $10 to $20. It really bothers her. It don't bother me. It just doesn't. Because the other thing that I know that I'm going to have during the course of the week, most of them are going to come back and get stopped out when I'm trading that way mechanically. But I will also have one where the son of a bitch will run like it's running today. And it'll be up $1,000, $2,000, $3,000. And I don't let Susan does not come in. When she comes to my office, she comes to the front door. She doesn't come in and look at my screens. Because, the way that I trade and my trading personality, we just don't. And I don't look at her screens. But it actually blends really, really well because I lean on trying to get the positive outliers. She's leans on putting the ball in play. So the downside is for Susan, she probably won't have that many. She won't have a trade that pays 1,800 or $2,000 on an individual contract because, she was up, 3, 4, 500 things trying to draw back and she takes her bread. But it works, right? But that's also her trading personality. What are you going to do? I don't know. I don't know what you're going to do. But we can have this conversation and we can set the programs up for you to look and see and then give you a chance to see, what you're going to do. And we want to hear, and we listen very well, and we want to understand what it is you're thinking, what you want to do, because that personality and stuff will come out and we want to see it. It might be really, really sound and we just leave it alone. And it might just need some little tweak or something and try to get you on the right path. Does that make sense? But trading resolution, right? So this is what, when I hear people and it's such garbage, like, on somebody on CNBC, saying, by the way, notice here I'm just noticing here, the VIX has just gone short here. You see that? So that would be giving me a little bit of pause. Now, please don't trade this, right? But let me make sure I want to make sure that that's refreshed because it almost doesn't look right, does it? So it's caught my eye. Yeah, so we'll see how this plays out. Now, please don't go long in the face of this, but I'm starting to think that maybe this sell-off here has run its course here intraday. We're starting to see the VIX turn short. Now, I'll describe this in advance, what will happen. We'll see on the 1 minute level, the ES, the NQ, the Dow, the Russell, you'll see all 4 of them and you'll see the ball fight start to turn green. Here's one right here. And they'll all start to turn green on the 1 minute. And they'll usually do it all at the same time. And then they'll begin to get some pressure. And we'll see the 1 minute say rip, which is ripping against the short. And then it potentially on a 1 minute level could generate a buy. See the little green one here on the 1 minute? Here's another one here. Then the NASDAQ, here's another one here, right? And so we can see, and we know, the panic level, they were down in here. So we could be starting to get now the machine is going to do what it's doing over here. It's not trading swing machine, but we could get a rip against the short, which is, the prices are coming up against the short, and it actually could generate a buy on the 1 minute. The 5 minutes is still short. It could be there all day. It could be there through tomorrow, but there still could be trades to be made on the 1 minute long, but not yet. Not yet. We'll see if that plays out. I'm going to describe it to you. If I see it play out, I'll point it out to you. Now your eyes are burning a hole on Swing Machine and looking at it very critically, and you should. I mean, that's fine, but we don't, right? We just give it a glancing view. It's just a glance. We got so many hours at this, but so this is like a digital ticker, right? And that may or may not happen. It's still, it's still, but this is, we'd want to see that VIX keep moving up. All right. So I don't want to, but the trading resolution is important, and you have to define, that's one of the things that you have to define. So if you are a option trader, swing trader, going out, you're putting on options for, our sweet spot is 35 to 45 days. We don't like to go further than that. And we don't, every once in a while we'll do zero, and zero DTEs have been around forever. It's, buzzword now, but that's always been the case. I was going to say, again, I lost my train of thought. I had a thought. I started thinking about the options. Well, you have to define, your own time frame, right? So I guess what I was going to say is that if you're a swing trader and you're an option trader, you probably don't even want to watch the intraday price action at all. I know that may sound like heresy, but the only time that I might begin to really drill down on that is I'm looking to capture my profit on the option, and this is going to be the day or two that I'm going to come out. Then I'll start looking. But if you just put an option on like for 3 months or 2 months or whatever you put on, and you're watching the intraday, I wouldn't even waste my time. There's just no point in it. It needs time. It needs to play out. If you are an investor, you're up in the sky boxes and you got your money in your IRA account, and you're trying to pay attention. I don't even know what you'd be paying attention to, and you're paying attention to the market intraday every single day. I wouldn't even bother. I wouldn't bother. You want to be looking maybe at a daily level, weekly level, monthly level, because you can see, like, on the ES, we can change the ES. See, I may not, because this is the actual contract, I may have to put this in a continuous, but we can put this on a monthly basis. And yeah, I got to put this on a continuous. The data isn't there for it to crunch. So you see, I got a monthly basis. Why do you want to get, you would have gone along the ES 154 months ago, back on 2010. Now, what's happening today is not relevant to you. If you had put one contract on back then and still have it, that one contract, you're up 160 grand. You just got to keep rolling them out. And then you can say, well, that's what I want. Okay. That's what you want. But the next time this signal goes short, you don't have to short it. You can wait, but it could be months. It could be years before it generates another buy signal. It could go short. And when you bought this on a monthly basis back here, did you understand that it was a monthly trade? Did you know that, you need to just sit on it? Maybe you had a drawdown of $2,000 or $3,000, $4,000. Were you prepared for that? Did you understand that? Maybe you made 10 grand. Oh, okay. But then what? Right? So, and you can look at charts. I'm going to do this the next time. I'm going to do that the next time. If you're not psychologically prepped and prepared, and you don't understand the trading resolution of what it is you're trying to do, then you're gonna struggle. And you just don't get many bites at it. We get a lot of practice because we're doing it, intraday, and we'll put this back to a 5 minute. So you have to define that, what we call trading resolution. So my neighbor, by the way, he found out one time that I did a little trading or something, and oh, you're a day trader, huh? Like, no, I'm not. I'm an intraday trader. What the fuck are you talking about? He looked at me like, he gave me like, a condescending, oh man, I'm an investor, you know, I own GM stock. How's that working out for you? Still trading at $34 a share or some damn thing. I mean, absurd. I get dividends. Oh, okay, good. I got the boutique broker. Okay, I got it. So yeah, we trade intraday. We're literally on the field. And if you want to be on the field, give us a shout. Visit the site. If you want these tools, they're going to save you some time. You might work them differently. You might set them up differently, but we're going to slow you down. You're not going to be able to join as an annual until you go through the queue, and then at the end of the queue, you have a decision to make, and it'll be a much more informed decision, and you'll feel much, I think, and I hope, much better about your decision. And it's constantly learning. You heard us talking to David earlier. We're working on, and during the course of the year, we'll be coming out with new programs, new things. We're constantly doing that, and there's no additional cost to all that, right? It just keeps going. I hope that helps. Okay, so you can see the VIX now is that little short. It's dissipating, and they're still betting on it long. So here's the little rip here. So we're getting a little transition level here still. We had that little thing with the VIX. It's still transitioning, and you see the little buying pressure here. This little buying here on the 1 minute, here on the 1 minute, right? So starting to think that we might see a little bit of a counter trade, right? And you can see it even coming up over here. Each one of these boxes and bricks over here is $100. It's $100. Remember what I said about 24 trading days in a month, 20. I mean, we could trade point and figure. We have other programs that will trade point and figure real aggressively, where you can just come in and turn it, ideally, if all you have is an hour a day. We have programs that will generate, and that's the other part, we're doing something specific here, but maybe you don't want to do that. And maybe you just want to have an hour a day. That's all you have. And you want the assistance of a machine. Well, that we have different programs that can run for short periods of time. And then you just got to turn it on and you compete with the machine. The machine's going to make you better. You're going to make it better. And you're just going to move on and get on with your life. Don't try to make sense of this shit. It's nonsensical. It's, money flows in, money flows out. It's, you know, It's the rational side of your brain that keeps asking why. I had a buddy once that would keep asking me, um, why, Don? Why is the market going up? Why is it? Who's buying it? Who's buying this? I'd ask all the time, who's buying it? And in the beginning, I would try to answer it. And I finally got to the point, I was like, why are you asking me that? It's crazy, crazy talk. Who cares? Why do you care who's buying it? Who's selling it? Who cares? It is what it is. Who cares? But if you're caught in the old school, you want to equate the market to the economy to the market. If you're caught up in all that, um, it can be difficult to let go of that, you know. I mean, did you hear them all yesterday? DiMartino Booth. I mean, that lady. I mean, they write these books on the Federal Reserve and talking, analyzing everything about the Federal Reserve. What a crock of shit that was, right? I just, oh my God. I mean, they're very nice people. The books are probably fine, but it is the biggest, crock of shit. I don't give a shit what the hell the Federal Reserve had to say or do yesterday. No, it is what it is. Who cares? They don't even know. Do you know that in the basement of Princeton University, they have in the basement, Princeton was, big. In Princeton and MIT were big economic schools in the day. Well, they still, especially MIT, they created a machine. The Federal Reserve did at Princeton in the 1930s, and it was filled with fluid, and they had different dials that represented interest rates and bonds and stocks, and they would turn the dials, and the fluid would flow through the machine, and they were trying to use as a model. It was a precursor to computers. But what I found interesting, and if you do a Google search, you can see a picture of it, but it was like water. It just flows. Money flow. So you got to get in and get your little ladle and scoop some out. Go into the river, you know, with your waders and your fly rod, catch yourself some trout and get the hell out. I'm not suggesting anybody, try to take any of these trades, but and you're on delay, you are on delay, right? So I wouldn't, right? It wouldn't do you any value, but you know, and you see here, we're starting again. We keep see these little trailers, and that's what these are, the 1 minute, right? And those are machines, right? So those could be the high frequency firms, not just not high frequency in the futures, but high frequency in the options market, in the other markets. And they might be, the all the selling pressure that we just had this morning could be dissipating, right? So this is rip, meaning it's rising against the short. It was a short signal 36 minutes ago, but it's rising against it. 38 minutes ago, but it's rising against it. 31 minutes ago, it's rising against it. So I'm starting to sniff. Please don't trade on this, right? But I'm just describing. I'm starting to sniff that we're about to see a counter move. And this kind of makes sense. We're about 1230. We've had a pretty hard sell off. VIX is still elevated though. And we've had a couple of looks at this earlier and and it dissipated though. Presumed the trend, the 5-minute trend continues to sell off. But if we get, what will happen is if it keeps coming up, you'll see the 1 minute actually go long. And usually you'll get them on all of them. They'll within a minute or two of each other. They, on when the market starts moving like this, which is mostly the case, again, a commodity, they'll all go long. Now, what type of trade is that? That is a counter trade, And that's when you're going to want to know. And we can show you empirically. We're not going to do it here. We did a little bit yesterday, but we can go into the program and say, okay, if you do take this 1 minute, it is a counter trade. The average winning trade is, it is what it is. If it's the NQ, I think we said it was like $315. Maybe you make a couple $100, and you probably want to be very quick. If it presents itself to make that money and get on out and get out. Now, you can't have these emotions, and I know what these emotions are, right? Because I had to grind through them too, right? I been there. I know what you feel. All right. I know. I can describe them. One of the emotions is, do I go? Do I not go? Do I go? Do I not go? Okay, I go. And it's the emotion, the anxiety of not knowing, exactly when to go. Oh, I got it wrong. Got it wrong. That's certainly or I got it right. Let's run it up. Oh, do I come out? Do I come out? Do I come out? Do I then you come out. And then, I should have stayed in. I should have stayed in. I kept running. I should have. That's all that. Oh God, that's awful. If that's what you're doing, do stop. Do stop. It's just not worth it. It's no way to live. And traders are not doing that. Not today. Not today. I don't. Just because somebody says that they are a trader doesn't mean that I define them as a trader. Um, and then the other one is, oh, am I gonna go? I don't want to go. All right, I won't go. I won't go. Oh, I should have gone. Or man, or am I too late? Am I too late? Am I too late? Oh, no, now I'm too late. Oh, now I can't go now because I'm too late. So during the Q school, we'll vet all that out, right? And get you hard boiled and defined, which we can't do here, and you're on delay, how to trade the machine. And then we have other tools that can help you visually see it on multiple time frames, pretty easy, so that you can get the result. The last person who went through the Q school was Cy, and he's like, it was his week, and like, wow, that was pretty sweet. Cy, and that's what Cy did. Cy, we just helped around the edges, but he finished with a profit factor of 4 for that week. But he's got to come in and do it, every week. You got to come in and But you don't have to trade necessarily every week. You don't have to trade every month. Up to you. You have available, right? So, all right. So you can see, right? See the. Let me just mark this up a little bit here, right? Now, the strategy is going to be doing what's doing. I'm not going to interfere here, but let me see what's happening. Let me get a marker here. You can see the buying in here. Can you see it right in here? This is on the 1 minute. See the buying? It's on the 1 minute, not yet on the Russell. So they're starting to, and then this thing is it's ripping against the short, and now the Nasdaq just went long, right? It just went long. Now, please don't trade this, right? I'm just kind of describing, and this one's trying to go long too, and this one just confirmed long, and this one's trying to come up, right? So they're countering. Why do I say they're countering? Because let's just look at the take these markers off here. The NQ. So let me show you. I'll map this out and we'll see how it does. The NQ is countering its long, but the 5 minute is still short. So it is a counter trade, and you have to know it to be a counter trade, and you have to know the trading characteristics of what you need to do. We're just confirmed. It's 3 minutes. That trade is 3 minutes old, right? The average payout on the 1 minute, we already know, we looked at this yesterday, is about $375. Now, we might be getting a little bit more because of, the volatility in the market. But, now if you go in there and you take your 65 or your $80, I don't want to put on trade for that little usually, but if we get up 200, it was up 200 there quickly, and you want to take your money, then you take your money. It is a counter trade. Counter trades are much more frequent. We will do better. We will do better if we let this go away, let this fail, let somebody else take a stab at it, and then get short again on the 1 minute in the direction of the 5 until the 5 minute actually gets long too. So we have to go through that scenario and that practice during the Q school, but these are counter trades. Now, could we, you don't have to trade it mechanical. Could we put the machine when that gave a 2 and it was shrouded? See, when you get a 2 and it's shrouded in white, that means it was confirmed. Can we put a machine, just like we put a machine over here, to alert you to when that thing is when that thing is alerting? Yes, we can. The machine can either put you in, put you out, or it can send you a pop-up, or it can actually send you a text on your phone. So, or Susan likes to use a lot of alarms and bells and so forth. But the likelihood is that these 1 minutes are going to fail and go in the direction of the 5 minute. That is the likelihood. We'll see. We'll see how it plays out. I wouldn't be trying to do this on YouTube. You're on delay. There are other tools that we use to do this so that you can have 0 negative outliers. If you have your hand on that mouse day in and day out, and you have carpal tunnel from all that. Ted, what are you doing? What is that dog? No, wait a second. That dog's on to something. Okay, sorry about that. The cat's in his basket. It's like cat was in his basket. Okay, folks. We are going to need to sign off, but I want to thank you for stopping by. We're going to let, of course, Zoom stays up for our members, and we're recording, and we'll try to compress, at the end of the day, the full day, the full 20, almost 18, 19 hours, and we'll condense it down to a minute or two. And but and you can see, pretty fast. So here's, for instance, that 1 minute failed. So now the 1 minute goes short again in the direction of the 5 minute. You're going to be more, when we're trading this, you're going to be more successful going in the direction of the 5. You're very welcome, Tina. And here, so here, for instance, the 1 minute long, the counter just dissipated, and it's now short. So we start out, everybody, trading the 1 minute in the direction of the 5. It's just one approach. Down the road, can you, counter trade? Yes. Can you change the intervals? And yes. I mean, there's a number of things, but that's just some basic ideas and some basic concepts. Again, what we're trying to do during the Q school is to get a person away from the discretionary, getting a little away from being getting chart blindness and trying to grind on a chart day in and day out, and um and just become more more mechanical and and less emotional. And there are other tools, of course, but we're just trying to get them to make impact, have a good posture, good grip, and just chip little golf balls, chip. And maybe you need to do that for months on end, to get your account where you would like it to be, and begin to learn and see, what happens to the market, on an options expiration day, what happens on a Fed day, what happens, and but it does take, I'm not saying it takes years to become a good trader. It doesn't, but to see the cycles of a market, it does. It does. Everyone for the last, 12, 13 years has only seen basically a bull. They've never, even 2008, I'm not even sure 2008 is a real bear. It was a very short-lived, but so anybody who's been trading in the last 12, 13 years has never really seen a bear market. Bear markets, when they come, they are absolutely debilitating. They'll be great for us as traders, but for the investment public, that's why the politicians, will do everything they can, to avoid them, but they'll absolutely just rip their hearts out. They're brutal on IRA accounts and on the investment public. Absolutely brutal. And when they come. So anywho, we're going to need to sign off, everybody. I want to say thank you. Let us know. And if you got any other questions, I'll wait a few minutes, and then we got to get back to work.